G'day folks, Jim here from FX Charts, 9th of January, thanks for tuning in. Well, the FOMC was a pretty muted affair. The release of the minutes had little market effect. The upshot was that the Fed board members decided that they could see diminishing benefits from QE going forward, but it had precious little effect on the market all round really. And the market's pretty much as it was before the numbers. Earlier on, we had the release of the ADP Jobs numbers. Now, they were a fair bit better than expected, coming at 238,000 as opposed to the 200,000 rise that was expected. And this may be a hint as towards the non-farm payrolls that we expect on Friday. The general consensus there is about 190, 195,000. But some players are suggesting that the current weather in the States might see a reduced number, but it didn't have any effect on the ADP. And that saw a dollar spike, although it gave up some of its gains later in the session. But it was enough to see 10-year bond yields back up at 3%. Later in the day, of course, we've got the ECB rate announcement with more interest really in Mario Draghi's press conference. And also we've got the Bank of England who are due to announce their own decision on interest rates. Once again, no changes expected there. So we go straight to the charts. And the euro, as you can see, the euro looks pretty heavy. This is an hourly chart, and it's been down, and it has tested this trend support line that we've spoken about over the previous few days. It's currently held 135.60. We'll go to a 4-hour chart, and you can see further out that it's this is reasonable support here. Now the 4-hourlies are pointing lower, but they're not suggesting that we're going to see any aggressive sell-off at this stage. There's a good support lower down, and if I go to the daily chart, we can see that we're sitting just above the 100 day moving average. And as I've shown you previously on the Ichimoku's, if we're just to go and have a look at them, we've got the daily cloud sitting right below here as well. So I think there's a good chance that if we do sit down but sort of low 135.25 area, there's going to be good support down there. If we do get there, I'm told there's pretty good central bank bids down there, Asian central banks, and it's 61.8% of the whole move up from 132.90 to 138.90. So if we get down to this 135.25 level, I'd tend to be looking to book some profits on short positions. Not sure I'd go long. I still like the euro lower in time, and the dailies are certainly not looking. I mean, they're a bit flat at the moment, but they're suggesting the momentum could be lower over the days to come. So all up, I prefer to play the euro from the short side. Dollar yen. Well, I had a good run yesterday, somewhat to my surprise, but it followed the Nikkei higher and got up to 105.11 overnight. This is a 4-hour chart. We'll have a look at the 1-hourlies. Yeah, it got up to 105.11, came back fair, and it's been chopping around above 105, 104.60 and below 105. Now this 1-hour chart suggests here maybe we're going to have some mild downward momentum during the day, but right now the 200-hour moving average is holding it up. On the 4-hourlies, there the indicators are somewhat inconclusive there, but we've got some good support down around here, around this 104.30 area. And if we were to go through there, I think 104.5 might well hold it, but if 104.30 was a break, then we're probably going to head back down here, this 103.90, 104 area that we saw earlier in the week. Above 105, I'm not really sure. I don't think so today. As I say, we did get up to 105.10, but there's good resistance above that. We have to go out to the weeklies really to see this, but this 105.40 area is 61.8% of this whole drop here, and I think if we do get above 105.40, which I'd be a bit surprised at, there are some barriers being protected at 105.5. But if we do go above there, then there's not an awful lot to stop us going a fair bit higher. I don't think today's the day for it, and if we are going to make that sort of move, it's going to be towards the non-farm payrolls. So before then, I think use 104, 105 still as a guide. Sterling, Well, that's been benefiting from the market feeling that maybe the Bank of England may move their 7% threshold for unemployment in order to move interest rates up. There's no real sign of that, though. I mean, it's they may say something tonight. I suggest probably more likely not so. But 164.70 did get taken out overnight, as we said yesterday. We thought that was a good, reasonable sell area. It's only come back by about 30 points, though. So for the time being, I'm not really too phased either way. I still prefer selling rallies in cable, although the 4-hour charts are showing that the momentum is reasonably positive, and we could get a bit of a squeeze up towards 165 on the course of the day. I think 164, 165 is going to cover it. As you can see on the dailies, they're not suggesting we're going too much higher over the next few sessions. So maybe we get some more choppy trade, slightly higher bias, but looking to sell into it. Dollar Swiss, which is what I kind of like most of all really at the moment. The dollar's really done the right thing all week. It's remained above this trend line. This is the hourly chart. Having said that, the 1-hour charts are not really showing any sign of life for the next few hours, and indeed maybe actually running out of a little bit of steam if you look at the RSIs and stochastics. The 4-hourlies, they're also somewhat overbought, so it wouldn't surprise me really to see the dollar come back and test the trend line. Currently, whereabouts is that at the moment? It's down around here. It's sort of 90.85, and that's really where I'm looking to buy some dollars. Mostly on the back of this 100-day moving average, which is down around here about the same level, 90.85. And what I'm ultimately looking for is a move. The dailies are beginning to look reasonably positive. I'm wondering if we might, having broken above the 100-day moving average, whether we might eventually want to head up towards this level here, which is at 90. Where is that? 91.80. And beyond there up to sort of 92.40, which the 92.50 was the previous high, and we're running into the top end of the channel here as well. Now, if you look at the Ichimokus on the dailies, let me just get that up. We're breaking above the daily cloud as well, which kind of adds to my, as you can see, we're breaking above the daily cloud, and although it's a bit difficult to see, the 100-day moving average comes in around that same level, so I'm looking to buy that dip there for an eventual move higher. The Aussie, not doing an awful lot. It is soft, and it's been soft for much of the day really. I'm not sure we're going to head too far south. We've got the Chinese CPI due later on today. That's it's about 2.7%, I think, is what's expected. And before them, we've got the Australian retail sales expectations being 0.3%. So the hourlies do look a little bit soft, as do the 4-hourlies, but we've got some reasonable support down here. I don't think we're going anywhere too far. The daily charts, well, as I've said before, I think we're running into some reasonable support down here below 89 cents, 88.5. 88.70, something like that. I'd be looking to buy my shorts back if I was going to be. I'm not got any position right now, but I've already bought my shorts back really because it's been mucking about here doing nothing. So, but I do think if you are still short, down around here is probably a decent level to get them in. On the top side, it looks to me, you know, we've got some good resistance up here around 89.80. That's roughly where it got up to earlier in the week, and then of course we've got, you know, up at 90 cents and above there the first FIBO level. There's going to be resistance. Doesn't look like we're going up there today. I think probably 89.5 probably covers the top side, and I would think sort of 88.75, 88.80, something like that on the downside. But wait for the Chinese CPI and the retail sales to see what they bring. The Kiwi, well, it's as I've said many times before, it's just chopping around. I don't really want to be involved. Yesterday, I thought we might have a flag formation. It did get up to 83.17 overnight, and it's come right back. It's now down around 82.60, holding on to support at 82.5. If we go through 82.5, and I guess that'll be dependent on the Chinese data, it would probably go down to 82.25. I don't think we're going much below 82. The 100-day moving average is somewhere down around there. Yeah, 82.13 now, by 82.15 now by the looks of it. Backed up by the 200-day moving average at 81.5. So I think there's better things to trade. Aussie Kiwi still looks soft though, and I think that may have a little bit further to go. That's the only way I'd probably play the Kiwi is short Aussie, long Kiwi. So that's about it. As I say, we've got the ECB and the Bank of England. Before then, we've got China and the Australian retail sales. We've also got German industrial production, but I think that'll get largely sidelined. So that's really about it today. Have a good day's trading, and we'll talk to you tomorrow. Cheers.